Hello, welcome back to my channel. I'm Cassie Villela, and I'm a realtor, property manager, and investor here in San Antonio, Texas. On my channel, we talk about all things real estate, from data and research to home and garden design. So if that's your cup of tea, like, subscribe, follow. There's links in the description below to other social media accounts. So today we're going to do our February market update. So I'm filming this on February 21st. I believe it'll come out on the 23rd. So the data is from the 21st. I'm going to start out like we always do with our update here on the COVID levels. Still bad, but a little bit better than last month. Fewer ICU patients, fewer patients on ventilators. So we are moving in the right direction. Hopefully the wave is kind of past. And hopefully we don't get a new one. Okay, showings per week. So I do want to take a moment to call your attention to the top right corner, the screen. So I wanted to make sure that it's understood that when I started this in 2020, I was making this primarily for real estate investors who were concerned. And you'll notice that the blue line starts in March 2020. Which is when something else started. So I started this kind of bi-weekly update back then so that investors could monitor, okay, what's happening? What do we need to know? And so I tracked the sort of starter home segment of the market, or kind of like where investors would be interested in. So like that kind of basic rental home section. And back in 2020, that was, in my opinion, was 100 to 200,000 was kind of the range that I would consider buying an investment property in that range. And so, as you know, if you've watched any of my market updates, we have, the market's just, right? So I decided to kind of adjust that each year as the market goes bonkers and goes up by double-digit appreciation. So in 2021, we noticed that I really needed to adjust it to 125 to 225 because, again, the prices went up like 20% appreciation year over year. And kind of continuing with that trend, I'm increasing it to 150 to 250 for 2022. So I'm hoping that pretty much gives us the data that we want as we're following along. I suspect that for a couple months here, maybe the yellow line might be a little bit higher just as we kind of normalize to that price range. But I just wanted to kind of let everybody know what's going on. 2021, you'll see that spike down on week 3. That's week 3 of February. That would be the snowvid or, winter storm Uri that happened last year. Of course, there were no showings that week, right? Or almost none. So that's why we have a plummet there. So unfortunately, because I started these in March, I don't have data from 2020 to see that we're kind of on track right now. But it looks like we are sort of trending where we would have been last year if we didn't have that freeze. Same exact story with rental showings. Rental showings don't need an explanation because it's all rental showings. There's not really like a price range that I'm targeting here. Weekly home sales, we are tracking just about where we were this time last year. I don't anticipate that we'll have that sharp decline that you see in 2021 right at the end of February. Again, Winter Storm Uri happened and title companies were closed, so we did have a little bit of a dip. We'll kind of see this year a more stable line, assuming, no catastrophes or unprecedented events happen. Weekly median price, we're continuing our trend of being much, much higher than this time last year. Interestingly enough, we did dip below 300,000 as a median weekly price in the third week of January. We went down to 292,500 as the weekly median price. That's the first time, since August that's happened. And so that's kind of interesting to me that we are going to see that later on a slide where that does kind of tend to affect the monthly median price. So we'll see if that's anything. It might just kind of be a slowdown in January, nothing to worry about. So here's where I said we're going to see that in the median sales price. You can see that we have been on, an upward trajectory, and we did drop a bit. The monthly median sales price for January was right at 300,000. It had been up to about 305. So I'm going to show you though the next slide. So I've kind of been keeping it to just 1 year at a time on our metrics here, sometimes including like maybe 2 years, just because I'm trying to see like month to month how the market's doing. But sometimes I think it's a good idea to just zoom out and kind of see like, okay, are there any yearly trends that can account for the data? Is there this little dip right here? Is this something to worry about, or do we always have a dip in December? So the next slide is going to help us with that, because I went ahead and put, give me the data as far back as you can, showing time. And so they went back to 2013. And you can see here how every single year has a very predictable pattern. We have these kind of, that peaks out in the middle of the year, summertime. And then it kind of goes down a bit. Peaks out, goes down a bit, and kind of slowly over time goes up. So every January, if you look, every December to January, we see a little downward notch on the chart every single time. 2021, 2020, 2019, 2018, 2017. Every year there is kind of a marked decline between December and January. Actually, this year is less than in previous years. So if we looked at that previous slide, you say, oh my gosh, maybe this means, well, no, what this means is that it's December and January, and that's kind of our typical to go down just a slight little bit. If we continue the trend line over the past few years, though, this will kind of be the new low, and then we'll go up over the new year and hit a high again in the middle of the year, May, June. I also like this chart a lot because it really shows the power of real estate. It really shows why I'm so passionate about using real estate to build wealth. Because if you look back, 2013, when this chart starts, the median sales price is 150. And now, less than a decade later, so 9 years later, we're talking about a median price of 300,000. So a doubling in 9 years of real estate prices. And even if it wasn't that dramatic, you can see that it pretty consistently was on an upward trajectory. It's also really interesting to me to see just how unprecedented 2020 and 2021 actually were when you compare with previous years. So previous years, we have from January to like mid-year, you might have a jump of 50,000, well, no, not even 50,000, 25,000 at the most. And then in 2020, 2021, you have these big jumps of more like 50,000. And you can see that there on the chart, just plain as day. And it kind of, it takes me back because I remember we bought our first house in 2013. And actually yesterday I love, the only reason I get into Facebook at all anymore is to see the like memory feature. And my memory feature today was me griping in 2013, 9 years ago, about how it was taking forever for us to buy this foreclosed house. And it was actually for our first personal residence. And it just happened to be like a home path foreclosure. And it was so frustrating. It was taking forever. It took a whole 2 months to buy it, and I was so like irritated with it. And I think back to now, like that was a really key part, getting into the market at that moment and having that house appreciate a good amount and being able to roll that into other investments. That was a huge part of our real estate journey. So it's kind of key to show like how important it is to get into the market and let your assets appreciate, and here in San Antonio back in 2017, we thought that it was, oh my gosh, this market's bonkers. Nobody can buy anything. It's so hard there's multiple offers, it's so hard. And now that just looks like a joke to me. So I kind of like bringing in some of these long-term charts, just to kind of give some perspective every now and then. If you like having those, then definitely leave a comment. And I'll try to find like more of those, like more long-term charts. Okay, moving on. Sorry, I get excited. New listings, by price range. You can see that we are still really hurting for new listings. We're still not really having as many as we probably need, but it did increase in January, so that's good. Pretty predictable. December, not as many listings in December for obvious reasons. And so a nice little bump in January. But still, we see that there are the homes for sale, the number of homes for sale is still decreasing. And so I'm going to go back again. I'm going to bring some more charts that go back to 2013 because I want to look at this new listings, because I've been saying, like the reason there are fewer homes on the market is just because they're being bought so quickly, right? We have the new listings, but they're just being bought so quickly that the houses aren't staying on the market very long. And so I thought, let's go back several years, get some data and see if we can prove that to ourselves with data. And so you can see here, on this new listings by price range that goes back to 2013, again, just this extremely predictable pattern over the year of it looks like a mountain range, right? Like it's just up and then down, almost exactly the same amount. It goes up and then it decreases by exactly the same amount, meaning like every December we hit a low point and then every June we hit a high point. And those are 2,000 listings apart. So in December you have less than 2,000 listings. And then in January you have in June you have more than 4,000 listings. And so we can see that actually over time, this past year, we had more listings than before. We actually had more homes available, which really, to me, makes it even more wild that our inventory is so compressed. We have no inventory. That just shows me that the houses are available, they're coming out, and they're just getting snatched up so fast. There's so many buyers competing for those homes. So that's kind of what this is showing me. I will also call your attention to, I've been talking about the like all price ranges kind of brown line. The colorful lines there at the bottom, I also think it's kind of interesting to watch that blue and green line, because back in 2013 through 2016, that blue line was always at the top. That blue line is homes that are under $164,000. And you can see that around 2017, that starts to really start going down, until now in 2022, there are almost no homes hitting the market as new listings for less than $164,000. And also the green line goes up to even 225, and that line is even approaching zero. And so it's kind of one of those things. I said this in the housing forecast that I published a couple of weeks ago, but we are really approaching a market where it's just an under $200,000 home does not exist in San Antonio. That's just the reality. Everything's going to be over that price, unless it's just a gut job or maybe really small or something like that. But like most homes are going to be well over the $200,000 mark. And that really has just been a phenomenon since 2020. You can really see here on this chart. And then homes for sale. So if we compare homes for sale over the last 9 years with new listings, this is where you can really see that it really is the velocity that is keeping our inventory so shrunken. We have the new listings. The new listings have stayed consistent, But you see here how the homes for sale from 2013 to 2020, it looks like just a slightly shorter mountain range, right? It's still following pretty much the same trend line that we saw in the last slide. And then 2020 happens, and all of a sudden it just plummets. It's not following the line anymore. And so that's where I can really, we all know that just being in the market, we're like, okay, homes are getting bought really fast. There's no active listings because they get bought up before they aren't new anymore. We know that kind of intuitively if you're looking or if you're another agent. But this is the data that proves it's right there where you can see it easy as day. Okay, pending sales are up a little bit in January. Closed sales are down just a little bit. That makes sense because that would be a sale that's closing in January would have been put under contract in the end of December. So it makes sense that we have fewer closed sales in January. Median days on market going up a little bit, but we're still talking about under 30 days on market, which is still just revolutionary. So I'm not worried about it. Price per square foot, you can see that is continuing to go up. Maybe stabilizing a little bit in that over $325,000 range. We will see what happens in the spring though. We've seen on the other charts where things tend to go up when it gets to spring, summer. So, okay, the next slide is median percent of last list price. We saw that bump where we went over 100% briefly this past year, but we are back down to 100% of list price. So if you are a buyer, you should be expecting to pay pretty much the list price. If you're a seller, you probably shouldn't be expecting way over list price at this point, according to the data, but we'll see again how that changes in the spring. Monthly supply of homes for sale, like we've been talking about for a while now, just continuing to drop. You can see in this past month, it dropped a lot. That's not surprising because the new listings in December dropped a lot. So, there are fewer homes on the market at the moment. So we're moving on to the SABRE market statistics. So anybody has access to this report. I only cover the single family homes, multifamily homes, and residential rental. The report also covers condos, land and lots, commercial. It also covers other, segments of the real estate market. So if you want to pull up that report, it is on the San Antonio Board of Realtors market statistics. You can log in there. You don't have to be a realtor. So I always like to say that. December single family home sales, pretty much the same as last year, really. Prices, we've become accustomed to a double-digit increase. It's no different now. We have a 15% increase in the average single-family home price. 2021, the average price is $363,075. In 2020, it was $316,046. In the median side, which I think is a more reliable metric, in 2021, the median price was $311,000. And in 2020, it was $262,400. So those are the prices, almost a 20% appreciation year over year. Days on market, December 2021 was 34 days on market compared to 49 of December 2020. That's a 31% decrease. Multifamily sales, about the same. 2021, we had 52 multifamily sales. 2020, we had 48, 8% decrease there. Prices, we had an increase in the average and the median. So obviously the prices have gone up. With multifamily, it's a little harder though, because again, we're adding in fourplexes and duplexes. So they're kind of all over the place. Residential rental. Units rented, about the same, 875 units rented in 2021, of December of 2021. Rent price is a 10% increase year over year. So 2020, the average rent was $1,526. In 2021, it's $1,685. And then we're going to finish up with independence titles data here. I like this one again because it goes back 5 years. You can see there the sales price, starting to take off kind of March of 2020 and then continuing through 2021 to just completely increase. All the way through December, we're up over 300,000. Whereas, 2017, we were under 220,000 was our median sales price. Sales volume is up. And we've talked about this before, but the sales volume is measured in billions of dollars. So the fact that it's higher doesn't mean more homes are being sold. It means they're being sold for more money. So there's more money, happening there. So a lot more sales volume, which would be expected with what's happened with the sales price. Months of inventory, of course, super all-time low here. We had, typically like 3 to 4 months of inventory, 2017 through 2019. And then starting in 2020, that plummeted down to under 1.5 months of inventory. A stable, balanced market, like it's neither seller nor buyer's market, would be 6 months of inventory. So that really shows you how much this is a seller's market. Like really, it's just a seller's market. That's how it is, especially in those lower price brackets. Number of sales, pretty much exactly where we were last year. Higher than years before, but not as markedly so as on the other graphs, but definitely just exactly where we were this time last year. And then average sales price, pretty much the same story as the median sales price earlier, just a little bit higher. So the average sales price in December was over 360,000. And with that, that's the data that I have to present today. I hope that was helpful. We're starting a new year. The Fed says they're going to raise rates, so we will see if that has any kind of an effect on the market. But we're also going into spring, so you saw with those, 7-9 year charts how spring tends to pick up. So I hope that data was helpful for you. My camera is overheating, so I'm going to have to end the video there. If you have any other sources of data that you want to see incorporated to the videos, or you have any other questions or comments or feedback, definitely leave that in the comments below. I'd love to see that. Do me a favor and leave a like or subscribe or do the things, and I really appreciate that. And I will see you on the next video.